With world-class expertise and local insight, Dexus creates value, not just for today, but long into tomorrow.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Well, hello, and welcome to the COB on the 28th of April, 2025. Of course, the start of a brand new trading week and all of the promise that that brings. And if we take a look at where the CIBO Australia Index has finished, it was a mostly positive session throughout the day today. A little bit of steam was lost toward the end. And we do have a couple of the big names into negative territory. But as a sector, it was only the materials that was finishing into the red. Of course, we'll get you across the S&P ASX 200 when the last of the day's trades do go through. But look, it was a session. We saw the gold miners come off once again as we continue to have a cooling of, I guess, the worst of the trade tensions between the US and China. In fact, I was just reading a note from the team at CBA saying that we've hit peak tariffs, that peak tariff is behind us. However, CBA also readjusting its expectations for global growth because of the uncertainty already being born and brought out by this tough tariff talk coming from the world's two largest economies. And on that, we did hear from a couple of companies today here locally who have indicated, I should say which have indicated, the impact that tariffs are having on their business, that being Brambles. So lowering its revenue guidance range because of the uncertainty, because of the tariffs, and the denting in consumer confidence. And we also heard from Flight Centre as well, which was an interesting one. Not only talking about the tariffs and the battered consumer confidence, but also talking about some of the entry policies that have changed in the United States, putting pressure on parts of the business, although it looks to me that there were other things going wrong at some of those business units. Anyways, Flight Centre will be cutting jobs. It will also be buying back up to $200 million worth of its shares over the next year. So, yeah, it was an interesting session to say the least. And to help us make sense of it all and to find out what we should be keeping our eyes on for the remainder of the trading week, really pleased to welcome into the program Josh Gilbert. He's joining us from eToro. Josh, hi, welcome. I suppose the starting point for this local market was that positivity that we saw on Wall Street to end the week. But many folks that I talked to today saying that the market is trading on hope, not necessarily reality. What do you think?
Yeah, I mean, look, we obviously started Monday in the US last week, sort of bit of negativity to start the week, and then throughout last week we had lots of positivity over in the US. Tesla earnings pretty disappointing, but sort of Musk stepping back in, sent shares higher. Alphabet earnings on sort of Friday evening, again higher after hours as well. So lots of optimism sort of coming through. The Alphabet sort of results were a nice one to get because it really narrowed back in on the fundamentals and sort of pushed maybe the focus slightly away from sort of the tariff concerns. But I do think, yes, we are sort of, you mentioned there about sort of, peak tariffs, and that may be the case, but that's why we're sort of seeing markets sort of rally, because I also think that Trump has sort of, cooled down some of, the tension, some of the commentary that he's sort of coming out with. Obviously, that 90-day pause is massive as well. But I do think that we haven't seen the full fallout from tariffs just yet. We may have seen sort of the worst of it, but the fallouts are still, to come. I think I was reading something in Bloomberg today saying that sort of cargo shipments from China to the US are down about 40% in April already from March. So that's massive. So we're already starting to see the repercussions of how these tariffs are going to affect the global economy, and that fallout, I think, is at some point going to sort of hit back on markets again.
Yeah. It's hard when we don't know where it's going to end in any way, shape, or form. I think it's really interesting, though, when you take a look at some of those top tech names. Of course, we get more of those results coming through this week. So it's the detail around AI, is it, that we're still looking forward to, and the CapEx spend in regards to AI?
Yeah, I mean, look, if we're looking at the names coming out this week, right, we've got Amazon, we've got Meta, we've got Apple, and we've also got Microsoft as well. And I think between them spending billions and billions this year, right? Amazon 100 billion, Microsoft 75 billion, I think Meta around about 65 billion. So we're going to be focusing on, how much they're going to be talking about capital expenditures, especially if we are going to sort of see that global growth slow down, because a lot of these big tech names were sort of committing this capital really before we sort of saw the fallout of tariffs. I mean, Amazon is that one that's going to be spending the biggest, and again, a lot of products that are sold on the Amazon website are going to be coming from China. So it's going to be really interesting to sort of hear from some of these names about, what they're spending on AI. If there's pullbacks, there's been rumors that we potentially may be seeing Amazon and Microsoft pulling back on some of the spending around AI, putting things on hold. But I think Alphabet really sort of, as I say, delivered some pretty strong fundamentals across the business, great growth in cloud, great growth across the advertising business as well. So I think the market will really dial in on sort of AI and cloud infrastructure. We know for Amazon and Microsoft that it doesn't really matter if they beat earnings. The focus is on that sort of cloud growth, Azure and AWS for each. And that's what, will ultimately be the key driver of shares here. So I think what the market wants to see here is that, again, when they're spending this much money, yes, it's probably going to have a short-term impact on margins, but could it pay off over the long term? Is this going to be the rocket fuel for these businesses, or is it going to be a costly misstep over the time? So I think we'll get a better idea of that. Apple, I think, is going to be a really interesting one to keep an eye on as well. Again, probably one of the stocks most affected, I would say, arguably by tariffs, of course. So sort of what we get from Tim Cook is going to be sort of really interesting. I don't think we'll get much in the way of forward guidance there, but that will be one I think I'm looking at, pretty closely to sort of see the fallout and what they're saying around China.
And I mentioned that we did have a few of the companies that are updating the market here locally talking about tariffs as well. Will this be sort of the cover for a lot of companies that might be having issues elsewhere? Because I do note that Flight Centre also referenced some underperforming business units as well. It's not as if these problems are completely being able to be laid at the blame or at the feet of Donald Trump and his tariff regime.
Yeah, look, it may be the case, right? I think whenever we sort of see something, a market narrative, companies will quickly use that, right? Whether it's been AI, whether it's been inflation in the past, there'll be a tracker somewhere that's sort of an AI tracker tracking how many mentions we get of a particular word during it, and it's usually either AI, it's sometimes been inflation, it's been a recession in the past as well, and I'm sure tariff will be at the top of the list this time around in earnings season. So I think that it is an easy use case for management to be able to sort of put a bit of a blame to. It's it's sort of gripping the global economy. It is going to have effects, across the globe. But I think from those sort of services type business, those are the ones we don't really want to be hearing too much about the impact from them. Again, it's more those companies that are importing, exporting goods. So for example, locally you've got your Brambles and those types of companies. They're the ones that are really going to be affected, and I think those are the ones that can sort of really talk to it more. Again, it may be a bit of a cover up by some other names, but I think we can sort of see through, as you say, diving into sort of some of those Flight Centre numbers. I think the market will be able to read through some of those. Yeah.
I suppose when we're talking about cover, we should talk about the RBA. I had a guest earlier today saying that the tariff situation has given the RBA the cover it needs to cut rates. The market fully pricing in an interest rate cut when they meet next time, but we still do have that inflation read on Wednesday. It's super important, isn't it?
Yeah, that inflation number is going to be really, really important, especially for that upcoming rate decision. Look, ultimately, the data that we've been getting, from the ABS has sort of continued to show that we are seeing prices ease locally. We had, February's data was sort of weaker than expected. So I think if this week's, quarterly inflation, as we know, that quarterly number is sort of, what the RBA looks towards. That's the important one. That's where we get all the sort of the data coming in. Then I think, it pretty much looks like it's already done. But again, it is, going to be very important to, I think, maybe future cuts moving forward. And I think that inflation data is key, but I do think that probably the tariff concerns and what's going to be happening, from a global perspective is probably worrying. I think Michelle Bullock and her team maybe a little bit more. I think it's a bit of a double-edged sword, right? Because we've got IMF estimates showing that we could obviously see the Aussie economy slowing down. I think it was around about 10 to 13 billion, something like that. So I think the potential fallout from tariffs will be much better understood, I think, for the RBA by the time they meet next month. We'll obviously have the election concluded by then. We'll obviously have the inflation data sort of coming through. So I think we'll have a nicer picture when we hear from them in May about sort of, how we move forward. But look, I think the beauty for central banks right now is they do have that flexibility. They do have the freedom to sort of be able to move. So if, the RBA does cut next month with that inflation coming in line, then I think it would be sort of the right move.
Yeah, well, speaking of elections, we have the Canadian election tonight, so we will know the outcome, probably during the Asian session tomorrow. Also, the CBA, incidentally, forecasting a recession for Canada off the back of all of the tariff turmoil. Josh, how's Bitcoin been holding up in this environment?
Yeah, actually pretty good. Look, I mean, we had a fair bit of weakness throughout sort of the tariff concern where markets were sort of selling off, but we're back over about 93,000 from last week. Again, whenever we're sort of seeing that risk sentiment change, Bitcoin is probably going to be that sort of leading indicator from both perspectives, right? Whether it's going to be to the downside, to the upside. It's that sort of key driver of risk either way. So plenty of positivity there. What we are sort of seeing from Bitcoin, and it's kind of been maturing over the years, is that we are sort of seeing less volatility in the asset itself compared to sort of other smaller assets, so your Ethereum, your Solanas, etc. We're seeing sort of much larger outsized moves. Bitcoin has sort of held up relatively well compared to some of the sell-offs that we've seen across other crypto assets. So still lots of positivity from a Bitcoin perspective. I think obviously Trump being in power, when he first sort of obviously took office, lots of positivity about what he was going to do around crypto. Of course, he launched his own meme coin. He was very positive to crypto assets. We also do have, a new chairman at the SEC as well, who is obviously going to be much more pro-crypto friendly, but those types of things are going to take a long time to sort of really implement. So we don't see this happening short term. We see it long term. Lots of positives for crypto moving forward, but short term is still going to be at the effect of what's happening on a global scale. But I think it does highlight at the same time why Bitcoin is sort of in existence, right? It's sort of that break away from that sort of traditional financial systems. It's really not at the effect of tariffs or anything like that, right? And has no barriers, no boundaries. So I think that is a highlight for it once again, but it still does trade from a macro perspective. And so when we're sort of getting uncertainty, when we're getting, the volatility we're getting, crypto as a risk asset is usually the first to leave a portfolio.
Sure is. All right. Josh, always a pleasure. Thank you so much. Have a good night.
Thanks, Nadine. Take care.
Josh Gilbert there joining us from eToro.
I think people have underestimated how far ahead, or how much of the supply chains China has actually monopolized and had for their own sort of use. It was actually the Pentagon or the Department of Defense that actually highlighted this to the leadership in the Americas, that if USA wants to actually fight a war against China, we will actually absolutely lose, because they actually control the supply chains. So it was, that's one of the messages that Trump got, and said, okay, well, we need to fix that situation and bring back manufacturing and make America great again.
And I think the Pentagon are giving or providing quite a lot of funding to Lynas anyway, aren't they? So they're supporting them. So Lynas has got a strategic tailwind, if you like, in that where they fit. But as an investment, it's very difficult. They haven't done particularly well over the years, and the fact where they had a lot of problems in Malaysia because there was an enormous popular uprising against the processing of the rare earths because of the argument that it was going to pollute the water table and so on.
An interesting conversation with Gary Glover from Novus Capital a little bit earlier on today on the trade. You can take a look at that. He reckons that he's been seeing a lot of signals, technical signals in the market, indicating that we could be taking another leg up shortly. And he names, I think it was five or six charts that are real standout to him. It included CSL and Macquarie. So I do challenge you to go find that on the website. It's Gary Glover, Novus Capital, for the trade. Yeah, a lot of interesting conversations taking place on AusBiz today. You can catch up with them all online, ausbiz.com.au. Other than that, we'll see you tomorrow.